Welcome to the panel from Prep to Passion, launching your raise and leveraging your fandom. Day 3 of Investment Crowdfunding Week here at Kingscrowd. I'm your moderator, Scott Kitun. Background on me, early investor, advisor to Republic, Kingscrowd, GigaStar, former founder of Songfinch, Technori, other businesses, and I'm a moderator for this discussion. The conversation is designed to give founders a real-world playbook for launching and scaling a capital raise online. Everything from structuring your campaign to building investor excitement. We've assembled, I think, a pretty incredible group of voices for this session. I've known most of these guys one way or another for almost a decade now, whether it's Kevin Morris, the CEO of Atlas Road. We'll bring him on momentarily. And then followed by a quick intro from Kevin, Jon Stidd, president of Dealmaker, and Andy Faberlle, VP of partnerships at GigaStar. But first, let's introduce Kevin Morris.
Thanks, Scott. Good to connect again. I think I actually met you in person for the first time, so it's weird to be on Zoom or video call.
But, I mean, our names have gone back and forth for a long time. I mean, it goes back to like early Republic days, and then finally met you in person, 2 years ago or so down in Chicago, and then here we are meeting again virtually. I won't even go into the backstory of finding out that I was on like an email thread or crossed paths with Andy in like 2012. And we're still schlepping in this space. So it's unbelievable. Anyway, without further ado, Kevin, why don't you tell us a little bit about yourself, fill in some blanks, and of course, Atlas Road.
Yeah, absolutely. Well, again, thanks for having me. And, always been a big fan and supporter of King's Crowd and Investment Crowdfunding Week. So really excited to be here. I think I've had a number of clients participate in the last few days in some of the panels and pitches. So great to have some time with the group. And so again, nice to meet you. My name is Kevin Morris. I'm CEO and founder of Atlas Road, small advisory firm where we help founders and executives navigate the equity crowdfunding process. Bit about my backstory. Spent about 8 or 9 years of my career in the sort of C-suite, co-founder, CFO, COO suite for a number of startups. And I got really into the equity crowdfunding world back in the early days. So this is post-Jobs Act, right when Reg A was allowed to go live. We were raising a bunch on SeedInvest, which is how I met Jon back in the rough and tough days of equity crowdfunding. We raised about $9 million for a company I was a co-founder of called Distilled. We raised mostly on SeedInvest, a bit on StartEngine. So I sort of cut my teeth there, raising money from our customers. We didn't do a lot of ad spend in those days. It was literally SeedInvest plus harvesting that customer community. I then switched my role and I ended up working for one of our lead investors, where I helped act as a fractional CFO for a number of robotics businesses. Miso Robotics probably being the most prominent. I raised about $85 million there as CFO and board member at Miso. Had the support of Jon and the Dealmaker team throughout that, and Miso continues to raise with Dealmaker, which has been great to see. In that world, in Miso Robotics, you don't really have customers. You do, but your customers are restaurant chains. So it was a different departure for what I had done at Distilled, which was raising from our community, from our customers. In this world, we were raising mostly through advertising, marketing the raise and sort of the normal suite of marketing channels that you'd be used to, Facebook, Google, and then all the newsletters that you can think of, TV, PR. So it gave me a different view of the equity crowdfunding world. And then about 3 years ago, I decided to leave my day-to-day role at Miso and start my own advisory firm, thinking to myself, hey, I've been in the shoes of executives. I've been in the shoes of these founders. How can I leverage that experience to help them navigate that process? And I have a number of clients right now, work with a variety of portals, and it's been great to take that skill set and really problem solve with those founders. And I think I'm excited about today's panel because that sort of world of marketing the investment opportunity to whether it's fans or a more rabid, loyal community, whether it's sports or what Andy's doing at GigaStar, it's been around for a while, but I think it's really started to come into its own. And the sports side, Dealmaker and what Jon's leading over there at Dealmaker Sports is super exciting. So I'm really excited about today's panel and excited to sort of leverage. I know we have founders on the call. We have people who want to invest. It'll be interesting to sort of tie that world of the blocking and tackling of launching any crowdfund, regardless of what industry you're in, but then also taking the skills and the experience of what Jon and Andy have been seeing and that sort of fan specific flavor of crowdfunding.
Yeah, so let's do that. Let's bring in Jon Stidd and Andy Faberlle. Both of you guys, if you could just talk a little briefly, Dealmaker, give high level on Dealmaker Sports specifically, and Andy, of course, GigaStar. I'll start with Jon, and then we'll roll into the conversation.
Great. Thank you, guys. So as Kevin mentioned, I lead up Dealmaker Sports. That's our go-to-market initiative in sports. My background is actually in performance marketing. Kevin mentioned it. That's how I met him. We were an e-commerce performance marketing agency. And one day somebody called us and said, hey, can you help us raise capital online? So that's when I had the opportunity to meet Kevin. His time at Distilled really got to show us the ropes of, how equity crowdfunding works, so we could apply those performance marketing principles to investor acquisition and what we're doing there. And Dealmaker's work in sports is really an extension of that because, as Andy well knows, when you have a really captive audience, those are your fans, your followers, bring them into the fold, it creates a unique synergy where, those followers become investors. So really excited to talk to everybody about that today.
Awesome. Andy.
Beautiful. Thank you, guys. Andy Faberlle, VP of Partnerships at GigaStar. Been in the creator economy since inception, very early days. And one of the reasons that GigaStar kind of stood out to me was that we are building the NASDAQ Wall Street for the creator economy, allowing the average person to invest, creating a new asset class, and really legitimizing the space that is now very much one of the most established spaces, growing 30% year over year. And we've taken a focus of really being laser focused on YouTube creators because really the king of content for the past many years has been YouTube / Google, and taking the approach of really starting from a place where the confidence for the market, we're SEC registered, we're a member of FINRA, we are doing it in a regulated way, taking blockchain technology to be able to scale. And the goal really is to sit in 401ks in 5 years and have it be an investable asset class.
It's very exciting. I'm going to do what I said I wouldn't do and go off script right off the bat because, why not? It's only, what day is it? Wednesday? Okay. So the three of you guys have raised a ton of capital through ECF. Obviously, I've been involved in ECF in and out, whether it was Kingscrowd or Early Investor Republic, helping companies raise capital at Technori. Personally, I've raised slightly over $60 million in venture capital, but only traditionally. The capital that's been raised through equity crowdfunding through me has only been like tangentially through my radio show that I used to host and other things. So I've actually not run equity crowdfunding campaigns to raise capital despite being an early investor in this space. And the funny thing is, I think we're going to get into quickly here is from the early days of you talking about SeedInvest all the way to now, so much more of this has become about expert professional marketing. And in the early days, ironically as it is, when crowdfunding was just getting started and I would talk to traditional venture investors, they would say, oh, it's marketing bullshit. They wouldn't actually acknowledge it as real, when in fact, that was actually the most legit it ever was. It was like seriously just cold email outreach and like interaction. And now I would argue that venture capital is largely marketing. It's more marketing, I think, than even crowdfunding is today, let alone what they thought it was before. So I think this panel will appeal and apply to everyone. It is a matter of whether or not you want to learn, and we'll start at the beginning, but you want to learn how to do this online. You want to do it in a way that's particularly marketing focused. And when I say marketing focused, I mean towards your clients, growing and making them client engagement advocates. But then there's this like whole second part of this, which is it is really convenient and really effective to raise capital this way if you know what you're doing. And I think a lot of people maybe don't know what they're doing. So why don't we start at the top, Kevin, with you on the origin, like I want to do this. I've decided in my head, I want to raise money. We'll assume that a lot of people listening here, I don't assume much, but I'll assume that most people listening here have been through at least a couple of these panels. So we'll just to clarify, $5 million under CF, $75 million under Reg A plus. There's obviously other things, Reg D 506C online, being able to market online, and of course Reg S if you're getting into tokenized and things, which I'm sure we'll brush on. But from the base point, I've decided I want to raise capital. I'm trying to determine, I'm a $5 million person. Why might I do Reg CF versus Reg A to start, Kevin? And then what are the things you have to set up in your brain and company before we even entertain the concept of leveraging your audience?
Yeah, great question. And I think there's obviously some sort of audit requirements, which anyone can Google. So I'm not really going to get into that. I think there's two major. Well, I guess there's sort of three major points you want to think through when you're trying to crowdfund. The first one, which is relatively easy, Scott, is Reg CF or Reg A. There are a couple nuances where, for example, if you're publicly traded, you have to do Reg A. But to me, Reg CF is sort of the best way to dip your toes into it. There's not an SEC review process. You can essentially get live in sort of a 60, maybe 90-day time frame. It's a great way to dip your toes in to test the waters, which I'll get into later, I'm sure. But test the waters into if crowdfunding is the right thing for you. So that's sort of par for the course. Fine, we check that off. The second thing is, where am I going to raise? Dealmaker and GigaStar are two examples and great examples of where people can raise and how people can raise through equity crowdfunding. The Dealmaker solution, and there's a lot of other competitors out there, is that white label solution. You are controlling the entire process end to end. You're controlling the marketing, the analytics. There's more of a cost to get set up than, let's say, a GigaStar or a WeFunder or a StartEngine. But in many cases, you have a lot more control over that process. But there's a cost to think about. On the GigaStar solution, which is the funding portal marketplace solution, there's an infrastructure in place that typically allows you to get live without maybe as many hoops to jump through. I'm not saying that's bad or worse, but that's typically how it works in the space. One of the factors, so that's sort of number two, and I'm going to jump to three, and then we'll go back to two, is how are you going to kickstart your raise? Because I'm sure Andy would tell you, as would any of the marketplace solutions would tell you, if you launch your raise, it's not like their community is going to invest right away. You still have to do something to jumpstart the process. And what does that look like? Well, there's typically two ways to jumpstart your process. Advertising spend. Do I have money in my bank account, my company's bank account, and it could be 50 to 100 grand to start with, to jumpstart that flywheel, to start to market my investment opportunity to the general public. And we could spend hours trying to figure out how you would allocate that money, but that's sort of what you have. That's option one. Option two is there a community that you can pull from to jumpstart your fundraise process? And that community can be as simple as your friends and family, your LinkedIn following, or sort of flavoring this conversation, it's your community base, it's your customer base, your fan base, whatever it looks like. And that's another great way. And a lot of companies do that. They'll go to their customers first, their fans first, and say, hey, I know you love my product. I know you love what I do. I know you love our team, whatever it is. We're going to open up an opportunity to become a shareholder investor in our company, in our entity. Would you like to participate? It's not as easy as that. You have to structure the comms properly, the perks properly, the marketing strategy properly. But that's sort of the biggest thing when you say, well, yeah, I think I have a great business. I think, my business model is great. I think people are interested in investing. It doesn't mean you can just turn on your crowdfund overnight and start to raise. And in other cases too, you could have a great business that may not be the best for marketing. I'm sorry, for advertising. I've seen plenty of health tech, med tech companies, whatever, that could be the revolutionary technology, but it doesn't translate to the crowd.
Right. It doesn't resonate with people.
Right.
I'm going to switch to Andy here because GigaStar just completed the fastest initial raise on WeFunder in history. When you close 1.5 in about 10 or 11 hours. I know that you weren't in charge of running that, so I don't mean to tee it up like you're going to tell us all the secrets of how to do it, but you handle onboarding of creators across everything at GigaStar. And I think that a lot of what you do probably is not dissimilar from what Kevin and Jon talk about when it comes to individual companies. In essence, creators are their own individual company. So when you are talking to a creator, what is it you're looking for? To be like, you know what, like as an example, Kevin just mentioned, not everything is a perfect match. What is a perfect match? What are things that you think particularly stand out when you're like, would this be a good candidate for whether it's GigaStar or just in general raising?
Yeah, definitely a great question, because it's something that in the early days wasn't clear, because we kind of set out with the intention of helping creators that make over $30,000 in their AdSense, and really identifying those that might be very early and some upfront capital might get them to that next level. But as we've matured as a company over the last 12 months, we started to notice a trend, which is creators that in maybe a former life were entrepreneurs, that maybe had a brick and mortar, that really understand financing, that really understand cost of money, the ability to raise, say, $1 million today, and really what that means in terms of the opportunity. So we found that, again, creators that are able to, we call them almost natural pitchmen. They're selling something, they are constantly in communication with their audience. They're sending them to their Patreon or possibly selling them one-on-ones. And that's really been where we're starting to hone in as kind of our ideal customer, is these creators that see the opportunity of taking risk off the table, diversifying their revenue streams. And then they get extremely excited when they wrap their heads around that they're actually securitizing Google AdSense. And when our secondary market launches here towards the end of this year, that's another way for them to essentially build a legacy, right? They're selling shares to their audience. These audience members are going to become their super fans. If they are selling courses or anything, these are their customers. And because we are the first company to be doing this specifically for creators, a lot of the challenges have been really the education and making us be different. There's other funding options in the marketplace, and we'll consider those debt instruments. And we're more on an equity play, right? If your YouTube channel is your real estate on the internet and you've been at it for 10 years, you've built a substantial amount of equity there. We're the first company that's allowing creators to essentially take that money, that capital out and utilize it.
I like it. I'm going to pivot into this, Jon, for you, because I think it's natural progression. A lot of founders, and I would even say platforms, which I am a huge fan of, like obviously Bias, Republic, WeFunder, all of them, they've got their place. I've been a huge fan of Dealmaker because of the approach you guys take, but I also think, and I don't know if, I'm curious what you think of this, I don't know if it was intentional or if it was just the timing of the events, but similar to what Andy said about the creators, that the original target was younger, less revenue producing creators who this is like their first niche in. A lot of the industry has found, at least in my experience, has found that it's not the first dollars in that does well at crowdfunding. It's actually the company that's slightly more established and runs its own campaign, has instruments internally, marketing, etc., brand voice, identity. They know what they're doing. And those are the ones that do well. They're the ones who are, like Andy just said, the creators who are almost entrepreneurial. It's the same exact thing. And you guys have done something that I think is unique because, Issuance was out first and they were doing some of the white label type play, but it didn't have the playbook, the guidelines, some of the things that Dealmaker does. How have you seen the type, like what are you seeing, I should say, are the types of companies now that just excel, like size, shape, maturity level? Like where do you feel like if I were a new founder or I'm a repeat founder, where I should be looking to enter the space?
Certainly, thanks, Scott. And I will say, that's one of the things that there's great that there's different competitors in this space that allow people different offerings, right? Because doing the self-hosted raise, really, you should be ready to raise, maybe even a Reg A. We do have people come to us for a Reg CF. Sometimes they're repeats, right? But to go that self-hosted route really is a commitment, and part of what Kevin was talking about in that whole setup, right? Being ready for that is us building the investor-focused version of your brand. So you really need to have a brand established so that we can then translate those materials into the investor-focused version of that, right? And we always have a great time partnering with Kevin on those deals, right? Because they have a process and a playbook for, building somebody's brand out so that you're ready to go raise capital, right? Now, what makes somebody a good investment? or a good offering to run, right? How can you market that? Kevin mentioned this. It's challenging because we've seen some, really great companies that um, it can just be challenging to represent them digitally. Sometimes that could be where the problem solution is a larger conceptual leap than you may be able to absorb in your Instagram feed because, you got to remember that we're digitally marketing to people. So, we're trying to be thumb stopping in an ad. So if their, problem solution and ultimately what they're building is, filled with scientific jargon that you can't break down through that brand exercise and get it into a succinct message, it can be challenging. The benefit is that it's digital. You can test your way out of some of those holes, test different creative templates and messaging to do that. So in terms of what we see be, a good digital offering, it really runs the gamut. We raise lots of capital for biotech, video gaming, right? AI, robotics. It can be challenging, but somebody just really needs to come prepared with the building blocks that Kevin was talking about. And one of those being, your brand so that you can translate that into marketing material and have really clear, succinct messaging that we can drive the digital acquisition with.
Well, if I were basing it solely on Morning Brew and 1440, the only brand that exists in crowdfunding would be Dealmaker. Just want to put that out there. A little pressure on the rest of us, raising our CPMs. Thank you for that. At any rate,
yeah, sorry about
we've
that.
talked to, hey, well, good, hey, it pays to win. But with that said, we've talked about a lot of the things that are things to look out for, the challenges, the changes, the evolution of this. I want to build a campaign basically from scratch and use you guys' expertise to do it right in front of this so people can take this and be like, okay, that's what I would do. And I think it's worth noting here, I don't even know where to attribute this. I just saw it maybe like 2 days ago when I was kind of reading through, it was some private markets newsletter, whatever. But the point that was being made, and I thought it was really interesting for this conversation, for the history of capital allocation, it has been supply driven. And it is only now, and this is like a perfect segue into the next panel after this that I'm involved in as well in entertainment and sports. We are now entering a completely investor demand driven capital allocation where if I want to invest in something, and you alluded to it, Kevin, earlier, test the waters. If I want to invest in something, I can. I literally can go out there and be like, I can get demand. I've got a community like Stefan does at Alts. We want in on X. Creators, we want in on a sports team. We want in on this PE firm that can buy 10% of the Niners. We literally can raise our hands and say we want this. And the asset owner can use any number, to your point, Jon, of different choices. If you want a platform, you don't want a platform, you want to do digital offering and go direct like Newsmax, all these things are out there. So what I tell founders, and I want to move back to Kevin, we're going to start from here and build a campaign for ourselves to go live with for all of our listeners. What I tell founders is ask who would invest in you. Ask around, is there demand? Ask your customers, is this a product you would invest in? Like just try to find out how much interest there is in not just yours, and there's obviously tells other companies similar to yourself that are raising capital privately or publicly, like ask around, test the water. So what we're going to do is I'm going to assume here that I've been in business a little while, repeat founder, sold my last business, not a huge outcome. I've got friends and family put in about $1 million into this business. I'm trying to launch it. I would like to use my previous network to become, advocacy of my company, but also, of course, investor, trying to raise somewhere around $1.5 million. I don't have a big team. I don't know whether I should be using a platform or should white label with Dealmaker. I want you guys to help me identify what I should do. To help me, just assume I'm not an idiot. That's a big assumption, I know. But assume that, and then just assume that I've got enough money that I can probably hire, some assistants in marketing if need be. I don't really want to pay a ton of platform fees because that's the one thing that a lot of founders find out later that they don't totally understand until they get there. So walk me through this. You guys are the kings of this finance world. What am I doing? What should we do? What do we recommend people listening who are in a similar situation myself?
I mean, I guess I could start, going back to testing the waters, and I don't think people use it enough.
No,
again,
definitely not.
It doesn't necessarily, so for the group, not the group, the audience, right? The SEC allows you to test the waters, great name, and put out and market indications of interest. Hey, if I were to raise capital or open up an investment crowdfunding round to you, whatever that community is, would you be interested in investing? It's non-binding. You can just say yes or no. You can say, yes, but I'd be interested in investing. You could have I'd invest $500, 1,000. You could do radio buttons. You can tease out perks. If I were to do this round, I would also, if you would invest 1,000, I'd give you a free hat or whatever. You can throw all those things out there. You don't need any marketing agency to do that. You can do it on your own. All you have to do is put a little disclaimer at the bottom of your communications, your email, and that's it. That again, that's not a crystal ball. It's not gonna tell you whether you're gonna have a successful race, but it is a great way for you to put yourself out there and test just, before you incur all these audit costs, these legal costs, these consultant costs, these onboarding costs. I've had plenty of people, prospective issuers reach out to me and I'll help them out for free. It's not a lot of time because obviously, hopefully you win the business, but that would be the first thing you would do. And I'll pause and let the others sort of chime in.
I'll switch to you, Jon. What are you doing next? So we've decided that we've got interest. So my company, I've got a little bit of money. I found out that there's interest. I understand the test the waters is basically like event RSVP, 40% show up. What are you doing next?
Yeah, and that's a great point. I'm glad Kevin mentioned testing the waters. That's a big part of what we do in sports, right? Because people typically have active captive audiences that you can reach out and try to turn them into investors. So I love what Andy and the team are building over there. One of the important parts of that is actually it creates a really good marketing touch point, right? Because you can create a reservation perk in a Reg CF. You can have time-based perks. So to enable somebody, Scott, you mentioned the conversion rate from that. You're quite correct, right? So for the Oakland Ballers, we actually ran this testing the waters campaign. They're a baseball team out of Oakland. They're in the Patriot League. They just won the championship this year. Shout out to them. But what they did was tap into that community via testing the waters, like Kevin was explaining. Great way to test that. And then launched a raise on the back of that. So, they raised about the first 1.2 of the Reg CF in about 9 days from that. So you attach those reservation perks to that, which enables them to secure that perk if they complete their investment. So that's something that I would tie into that to help increase that conversion rate from there. What I would do after that is, Scott, you mentioned in this scenario, you have a team who, can help with marketing. Think about the content schedule after that, right? Because it's all about these marketing touch points. What we've always done great work with Kevin on is designing that content calendar to continue to have updates, right? Because once those people come in, you want to continue to talk about the last thing. So that's something.
We'll switch back to Jon in a second here. I'm going to go to Andy real quick. One of the things that I think Jon will probably attest to, and I know Kevin will as well, is that CEO, founder, face definitely is a huge part of this. Getting out in front of your business, being really good at selling it, explaining it, creating, interest and excitement around it. But it's no different than going public. You see a CEO on a press tour, on a roadshow, almost certainly around going public, which this is not too dissimilar. Creators are the same thing. Creators are businesses. When you're looking at creators, what is the advice you're giving to the founders, or in your case, to the creators, as to how they should address the people that they know? Obviously, we know we're trying to run marketing campaigns to create tops of funnels and all kinds of new entrants into our investment. But for existing network, what do you look for? What are you advising?
Yeah, we're in a unique environment because these creators have their fans, right? And some of them are in the millions. And early on, we were leaning heavily on their expertise, right? Your audience, how to talk to them, but none of them had ever done, we'll call it crowdfunding, right? So some of them felt uncomfortable, and we got really good at guiding them through the process, whether that was like through the content calendar. Hey, we want a 15-second snippet that's going to run in, as a pre-roll in front of every one of your new videos. Some of them did extremely well going live, and it would be these kind of Q&A, and they would have several thousand people, and they would address questions. And this is what I'm expecting. This is what you should expect. Because again, some of the challenges, especially for their fans, is this idea that when I invest in this channel, I'm going to own the rights to their next movie, for example. And clarifying that, and you are positioning as like, hey, look, you get one of the creators we work with did a phenomenal job because he's like, look, you're investing, you get all the gravy because you're not going to be investing in my overhead and my employees, insurance, all these things. I absorb that. But what you are receiving as an investor is a percentage of the revenue alone. And so there's been a lot of learnings that we've had to pass on to these creators because naturally, even though many of them work with brands and have no issues, like, hey, this video is brought to you by Audible, click below. That to us is an indicator that they have the ability. So one of the metrics that we look at is engagement, which is what a lot of brands do. Is your audience listening to you? Can you make them go from here to there?
Yep.
And then we position them as the brand. Like, this might be uncomfortable at first, but you are now the brand. And what you need to communicate to your audience is that they have the ability to invest in you. And, the ones that get it, love it. The ones that are uncomfortable, probably not a great fit to work with us.
Makes sense. Kevin, I'm jumping back to you here because I'm thinking to myself, all right, we've launched, we're having a decent success. We've got a playbook, we've run it, we're about 12 days in, and now I need to keep momentum. I don't know how to do that. I think a lot of people forget that like a launch is not a launch that ends when the button's pushed. A launch ends when the shuttle is safely back at the base. We're not there yet.
Yeah. Yeah. So I think, a couple of things. John mentioned it earlier that you're live. You can't just go live without a plan. And
right.
You need to have a 2-3 month plan at least in place. And obviously if you're raising $1 million, maybe that's only 3-month plan, but if you're raising 10, you may want to think beyond there. You need to keep that trickle of information coming out because in general, most of the crowdfunding deals, you're asking somebody to put in a few hundred, maybe a few $1,000s. They got to be wined and dined. I use that all the time. They're not just going to put money in overnight. The other thing is that, especially as we look at sort of the passion fan angle, these customers, these fans, this community, they're fans. They're passionate for a reason. And if you're the athlete, if it's in sports, if you're the creator in sort of the influencer world, these fans want to have touch points with you. So be proactive on reaching out, record 30-second videos, do events, offer up webinars or sort of chats, one-on-one chats or sort of, group sort of chats, roundtables, office hours, things like that. I think that's important for any issuer, anyone raising capital, but I think especially in this place because that team or that influencer, they are the product, they are the brand. There's a cost to it. It's time, but it's still,
pretty valuable
than spending, tons of money on John's 1440 sends, So
I can attest to them. I know the price, by the way, John. I'm not going to say it on the air, but I had to outbid you, and it sucked.
We love 1440. We're not meaning to poke.
No, Tim's a friend. He's a Chicago
It's
guy.
great.
I love
It's great distribution.
Yeah. So yeah.
No,
I think it's keep beating that drum. But in the case of sports teams and entertainment and influencers, give these prospective investors the opportunity to interact with you more, and it will pay dividends on your fundraise.
I'm going to join the panel for 3 seconds here just to tie this out before I hand it over to John for another question. You bring up such a great point, Kevin. Obviously, traditional funding, founders notoriously do a poor job of this, of just staying in contact with their investors and keeping the loop going. In Fandom, I would just ask anyone who's listening to this to think about it themselves. Like, is it the marvel that when you DM someone you're a big fan of on Instagram and they respond back, are you like blown away that they had the capacity to like open up a DM and like respond? Or is it the fact that there's like now some sort of like thing that the two of you share, this like little message? It is so important that you create a dialogue with your investors. If you've got 1 million of them, then it's a one-to-many. And if you can do one-to-one or one to a small many, it's super important. Andy deals with this every day. GigaStar with the creators. You might have 7 million fans, but it's like the act of investing to your investor, if you're going to take the passion economy status, they literally feel like they got a piece of you. The negative, which we'll get into before the end of this panel, is that sometimes they think they do, in fact, own a piece of you, which is a different problem. But it is incredibly important, almost like finding a spouse, that like in your first couple of dates, you just kind of leave shit behind to make sure they don't forget you. Like, it's very important that you create some kind of a glue effect. And I think the best way to do it, and the most underutilized way to do it, is office hours. And Kevin mentioned that right off the bat. So let's move ahead. Let's say that I bumped into Kevin. He said, Scott, you got to do office hours, man. These people want to invest in you. They just don't know enough about you and the company to put the big money up, which, by the way, also a great tactic for increasing the average amount invested is having the ability to have FaceTime. Now, I've hit 1.25 million in my campaign. I didn't file, or I hit 1.3 or whatever it is. That's just shy of what my max I'm going to be is. I'm working with you, Jon, at Dealmaker. We're thinking we might be able to raise a lot more money. What happens next? I've already executed my plan. I'm 3 months in. I've raised the amount of money I expected. Demand continues to be there, and I've figured out this trick. Now I know how to do this. How do we do this ongoing? Is this something everyone should do ongoing? Is it something that you just take advantage? The old line that I always used to do, raising capital, is when it's there, you take it. Never leave good money on the table. And that's just something I would say to anyone in real life. Never leave money on the table. But what would you recommend? I can keep going here. What would you recommend?
Yeah. Can you answer?
Yep.
Oh, fantastic. You know, at that point, if you're 3 months in, you what it would take.
Oh, you're cutting out a little bit.
If you, oh, sorry, guys. Is that better?
Now I can hear you. Yeah.
Oh, good. Okay, great. Yeah, so if you're to that point and you're 3 months in, you've raised just amount of capital that you're going for, try to max that thing out, right? And what we'll try to do is oversubscribe that range. At that point, you'll have the benchmarks, right? What is the cost per page view? What is the cost per investment start? Ultimately, what is your cost per funded investor? So we'll work with you and Scott and say, hey, Scott, like, if you want to raise the next level of capital in this, here's what that investment looks like. We'll get some ads in the 1440 for you and, scale this up, because what you'll want to do is scale that into close. And then as that campaign closes out, so you hit your goal, leave that test in the waters campaign open to continue to collect interest, right? Which is a powerful way to collect that overflow, so to speak. And then to your point earlier, maybe we can get into this, is, what happens when people think they own a piece of you? And in some offerings they do, right? So you'll use that time period to continue to communicate and update people. We've had, we work with founders to say, hey, if somebody reaches out to you, say, hey, I offer the quarterly investor update, right? Just like I do for all investors. So you try to standardize that, but to your point, you capture that initial momentum and then try to continue it with good nurturing, after the campaign. You don't just want to reach out when you're asking for money. So you got to give them updates. Anything can be grist for the mill, right? It could be a quarterly update. It could be you walking through the factory floor. It could be, one of Andy's creators, going live and, talking about a new update. But you really want to continue to keep people warm and engaged and make them feel updated, because there's also people on that list who didn't invest in the first round. And maybe they're ready to in that second round. So the more that you can continue those content updates, the better.
And that, I think, is also the carryover to the marketing effect. If in fact this is a part of your business model of using crowdfunding, is that you want to market your business, there's no better way than to literally tell people like how awesome you're doing. Or in the case of like you're struggling, it's just like, it's not ideal, but it's also a huge opportunity for transparency, which is its own currency. So I feel like that's a great way to do this. I'm going back around the loop here at Andy, because I do think creators is like a really perfect example of feeling like I own your business. We were just having a conversation today, we won't name names, about creator who is not doing as much content pushing just right this second as they were before the raise. And there are a lot of reasons for it. But the idea that an investor who would have never in a million years in their life ever have thought to DM their favorite creator or company and said, why aren't you releasing new products? But the minute that they've invested even $5, they believe they have the right to email and text you and say, why aren't you releasing more product? How do you recommend the fan in this case, but the creator, it can be a business as well, the CEO, who generally are probably fairly public with Instagram and LinkedIn and whatever else. How do you recommend they carry themselves and manage that relationship going forward? This is a personal thing. This is not about just trying to convert. Just literally, how do you conduct yourself?
Yeah, I mean, definitely. And, kind of one of the services that GigaStar provides for its creators is we build out a Discord group for the investors to be part of. And we're always guiding the creators to have an open line of communication, right? Things happen. The agreements that these creators and investors have, it's essentially that they'll continue to do what they have for the next 12 months. Now, we all know things happen, personal things, death in the family. And some of these creators are now in a position where if they were doing 2 videos a week and they miss a week, there's 1,000 people now. It's like, where's the content? I'm an investor. And this is what, what, what you were talking about. And it could be that if he had maybe put something out, hey, I'm sorry, this situation has happened in my life personally. Don't worry, I'm fine. I'm here. I'll get back to my schedule when I can. And that's one of the reasons that we are always on top of them, that keep that line of communication open, because the second you try to run away or hide is when really they will turn on you. And we've seen it.
Yeah, and this applies to founders the same way. I can't tell you how many stories, again, without naming names, of people who like literally went on paternity leave, or they went out when they were doing a raise, they got their money, and then all of a sudden the company was just like quiet. You're like, what the hell? Like, what is this? You are effectively running a mini IPO, and certainly for the Reg A plus, but even in CF, and you have to. I personally, this is just my belief, maybe you guys don't agree, but I think that once you are raising money from anyone, let alone private market, or I'm doing it online, or whatever the case, you owe those people a certain amount of communication. And it's a great opportunity to build an incredible relationship with people, an incredible trust that allows you to raise again and again and again. And I kind of look at it like, if this is your first time going through raising, again, whether it's crowdfunding or traditional, you're leaving breadcrumbs for the way there and the way back. And once you're there, you should build your rails on the way back so that you can use it again. And certainly, I think guys like the 3 of us in particular, but there's a whole, I mean, we could name names for literally the rest of this panel of people who've done incredible stuff to make this work. And I think we do a lot of the policing and try to make sure that bad actors and people stay out of it. And the fastest way to do that is to tell founders before they even do it that this is a tightly knit community of people who pay attention. So like, don't come in here and think you can just like raise all willy-nilly and like it's going to be fine, no one's going to catch you. This is a real business, and there's a lot, 1.65 billion invested in the last 18 months or whatever it is. It might be more than that now. This is serious business. Kevin, I'm going to come back to you to kind of not wrap it up, but to kind of summarize this whole thing. We've raised money. I've got a great LinkedIn ghostwriter / myself who's making sure that we're keeping people updated. There's no blackout periods. I ended up closing my roundup just shy of $5 million. I did end up taking Jon's advice, and I ran the test of waters again, and I recouped and got everyone in. So I maxed out what I think. I liked it. It was different, but I might come back and do this again. What do I have to do to be able to stay compliant? What do I owe people now for the time being? In particular, if I plan on doing this again, what did I sign up for here?
Yeah, so if you've raised 5 million on the
we're CF.
Reg CF, then you have to, your biggest thing in terms of being compliant is filing that annual report. It's called a Form CAR. Depending on if you raise 5 million, you do have to do annual audited financials. It's not too onerous. It's typically due end of April if your fiscal year ends December 31st. That's the minimum. That's what you need to do from a regulatory compliance perspective. But again, you should be updating your investors at least monthly. Just with, hey, it can be a quick note. It can be a quick email. That's the right thing to do. Whether or not you're going to raise in the future, you should be doing that. And again, as we look at that sort of fan community angle, like, if it's a sport, I go back to a sports team or you're a creator, the success of those 2 entities or endeavors is really directly tied to the fan involvement. And again, Andy, going back to GigaStar, you mentioned AdSense revenue. I mean, literally the creators get paid when people watch their videos on YouTube and ads are served. It's a fantastic service, by the way. If you should look into it. The last thing you want to do is piss off your now investors who are also part of your community by not updating them. But if you do update them, they'll probably watch your videos even more, and everybody wins.
Right. Yeah. And then like, it's funny, this is something that's overlooked, and this might be the old school, and some of us just judging by the wrinkles under the eyes, the number of kids that are probably present around here. I come from like an old send a note type of place. And like every year I would send out Christmas stuff. I would put together a swag bag and send all my investors, all my vendors swag stuff. And I know that if you can't afford it, we're not talking about wasting good capital that your business needs to like live and die, but assuming that you're doing okay, it doesn't have to be expensive. Just sending all of your investors a pen, a shirt, a hat, something stupid. It's just a reminder that like I didn't forget you. And you can, you still obviously send your updates and so forth. But I think that that's an important piece of this. And in general, I think that it allows you to decide again, do I want to raise again? And that's a key part of this. And you guys have all mentioned the danger, the flip side of this, if you will, is that if you do not handle it maturely and properly, yes, you have the potential to piss off / alienate some of your customers. And I think that should be incentive enough to stay on the up and up and write the things away. Lasting kind of messages here. Anything you guys think we missed out that anyone who's listening probably should know about using their audiences and running a strategic round? And if not, then we can wrap up with Kevin on what we should do next.
I think the biggest thing is make sure you gut check your minimum investment. It's something where I've seen fail pretty dramatically. We've made it.
Yeah, can we do that real quick? Actually, I wish we had started with that because I forgot entirely about the era of starting at like 125,000 was like a common thing for a minute until people couldn't break 20 and they didn't make it. Can we talk about the minimum? I don't think anyone has really talked about specifically minimums so far.
Oh yeah, I was more referencing the minimum individual investment size, not the.
Oh, I'm sorry. Yeah, that too.
So,
let's do both. Take them both.
So, for example, I always use this example. I'm sure John's used it more than I have. Brewdog. Brewdog is sort of this classic example of crowdfunding success story. Scottish brewery raised over $100 million, mostly in the UK, but some here. Their minimum investment for a time was like $50, and they're trying to target their fans of their beers. And
right.
Again, just makes a lot of sense. Because everybody drinks beer, and you can make your minimum $1,000, which a lot of Reg CFs, Reg As do. But if you really want to harness that, you want to get as many shareholders as possible who are then going to go back and tell their friends about the beer and go to the pubs and all that stuff. They were smart. They set that minimum investment very low. I've seen other examples of apparel businesses having raised a lot there, where you have this great jean or t-shirt that only costs X or Y. It's maybe under $100. If you're really trying to harness your customer base to be investors, maybe you don't set your minimum to be too high. So it's just one of those things where you know your business the best, you know your customers the best, and you can sometimes make the wrong decision on that and sort of deal perks and terms, and it can have a huge negative effect on your fundraise.
John, I'm going to switch to you real quick on the other part of this, which is setting a minimum. How do you do that? Why do you do that? What is that? Setting a minimum total investment before the capital becomes free to me.
Yeah, certainly. Oh, so for the minimum total investment, before the capital becomes free. A little bit more challenging. You want to make sure that you can reinvest in your flywheel. So to the extent you can, right, like set that as low as possible so that it gets released, right? Have a good use of funds, be ready to deploy that. But to Kevin's point earlier, you can start the marketing flywheel with that capital, so that quickly you can pull those out and recycle it back into marketing. Is what we try to do to put out the rest of the campaign. You obviously have to have good fundamentals in that, right? A good return on that trying to get there. But yeah, I would set it in the lower end. But I do appreciate Kevin's perspective on the actual minimum investment amount for those investors. You want your community to get in, right? And you can do different things with the Reg CF to do it a lower minimum out of the gate, which is where for people get early and to reward your offering.
Makes sense. Andy, I'm going to go to you and then we'll wrap up here. One thing that GigaStar does that others don't, and this is because of the way in which you guys sell the CRT, the creator revenue token. You have 3 price points. You've got kind of like the premium, platinum, you've got a gold, and then you got titanium or something in the middle, a diamond, whatever. I don't know what it is.
We should have a titanium.
I would love for you guys to have the Scott Kitun titanium token, the STT. But what is, how does that, like, How do you use that? Because it seems like it's a marketing tool, really.
So yes, kind of the science behind it was thinking of being inclusive to pretty much anybody, right? And so a lot of the creators have set their pricing from $50 to $100. That's that first entry level. And these tokens are, we'll call them a share. And the second tier is 4 shares, and the third tier is 16. Now, what we've seen is the lower tier is typically the fans. Like, hey, I want to support you. I'm going to buy 2 or 3. The middle tier is for those fans that might have a little bit more money and really kind of see the opportunity. And then the third tier, what we have experienced is that it's not the fans. We have 28,000 registered investors on our platform. There are investors in there that really aren't following YouTube creators or anything of that sort. They're looking at it as the economics of a deal, right?
Yeah.
And part of my job is to price these deals correctly based on a lot of metrics that we have internally. And these investors want to be able to put in $10,000, $20,000 at a time because, again, they're getting a monthly dividend. Right. And it's a little different than kind of traditional crowdfunding where, you know, you have to have an exit event or some sort of liquidity event in order to participate in the profits. From day one, these investors are getting a monthly dividend. So we have one investor that has a 6-figure portfolio. He's getting several $1,000s a month, like clockwork, in dividends. So it becomes a very attractive. And then once the 12-month holding period for these securities expires and the secondary market is open, they can sell partial position, they can sell all their position. So that is kind of the reason for these tiers is somebody that has 16 tokens might sell 8 and keep 8, or, you know, so that's kind of.
It's fascinating to me how much this has evolved from the early days, 16 and 17, where it was just like, how do we get people connected and get them to understand where to put their information and hook up their credit card? And now we're like talking about the marketing mechanics of how you even position a deal, whether it's perks or this or that. This has been awesome. Thank you guys all for joining on this. Kevin, want to make sure people can connect with you. Where do people go to connect with you and Atlas Road?
Yeah, again, thanks again, Scott, for hosting, and John and Andy, appreciate you participating as well. You can check me out on LinkedIn, of course, Kevin Morris, Atlas RD. It's Atlas RD, not ROAD. You can also check me out at www.atlas-rd.com or kevin@atlas-rd.com. So thanks, everyone.
Awesome. And of course, you guys go to dealmaker.tech. And you can go to gigastar.io and learn everything you want to learn about those 2 platforms. I want to thank the audience for joining us. This concludes the Prep to Passion session. Hopefully you feel like we discussed at least something insightful around practical lessons for campaign prep, importance of structure, and how to leverage an existing audience into actual capital. Stick around for the next part of today's agenda, sports and entertainment offerings, pitch session, which will be hosted by me. So if you did not like what you got here, you might as well tune off now. We'll see you tomorrow. For the rest of you, we will see you over there. Thanks, guys.